A strange thing happens when people get a raise. They expect relief. They imagine finally exhaling. But a few months later, they're just as stressed as before, sometimes even more. And once you notice this pattern, you start asking a dangerous question. What if more money isn't the solution we think it is? Let's talk about this illusion of once I make more. For most of our lives, we're taught a simple equation. More money equals less stress. So we grind, we chase promotions, we job hop, we tell ourselves, once I hit this number, everything calms down. But for a surprising number of people, that moment never comes. Because the stress doesn't disappear, it just changes its outfit. Over the years, I started noticing something. Friends would get better jobs, sometimes significantly better. They'd go from barely scraping by to making what used to sound like a lot of money. And at first there was excitement, celebration, that feeling of finally making it. But when we talked a few months later, the anxiety was still there. They were still checking their bank account constantly, still stressed about missing work, still terrified of one unexpected expense. The number changed, the feeling didn't. But what's actually happening? Here's the part no one really warns you about. When income goes up, most people don't buy freedom. They buy commitments. A nicer apartment because it makes sense now. A newer car, more subscriptions, more convenience, more lifestyle. Each one seems harmless on its own, but together they build a financial structure that requires your income to stay high. And now, instead of worrying about paying bills, you're worrying about maintaining a lifestyle. That's not security. That's just pressure with better furniture. The psychology, why your brain still panics. Your brain doesn't measure success by salary. It measures safety by margin. Margin is the distance between what you earn and what your life demands from you every month. If that distance is small, your nervous system stays tense. It doesn't matter if the numbers are big. Now let's talk about fragility versus stability. Most financial stress isn't about poverty, it's about fragility. Fragility is when one missed paycheck causes panic, one repair ruins your month, one bad decision feels irreversible. More income doesn't fix fragility. Sometimes it hides it, right up until something goes wrong. The question that changes everything. Instead of asking, how can I make more money? A better question is, how can I make my life harder to break? That usually means fewer fixed expenses, slower lifestyle upgrades, actual cash buffers, flexibility over appearances. It's choosing boring stability over impressive instability. And that choice is uncomfortable because it doesn't look successful from the outside. Let's explain it as an analogy, the car that explains everything. Think of money like a car. Income is the engine, but stress comes from the road. If the road is rough, a faster engine doesn't help. It just makes crashes more expensive. What you actually need is suspension, shock absorbers, savings, low obligations. Those are the things that smooth the ride. So the real takeaway is that more money can reduce stress, but only after you stop upgrading your lifestyle at the same speed as your income. Financial peace comes from margin, flexibility, and knowing a bad month won't break you. That's when money stops feeling loud. That's when it finally does its job. If this video challenged how you think about success, subscribe, because the goal isn't to look rich, it's to live calm. And those two things are very rarely the same.